I often looked at my investments and I noticed that most of the companies that I own are rather conservative. Salesforce being a huge tech giant, a SaaS business, Google having over $100 billion of cash on the balance sheet, Amazon dominating e commerce, and AWS and many other of its businesses, and then many of my dividend growth portfolio. My stocks in here look very, very defensive compared to many other investors' portfolios, like WP Carey, JP Morgan Chase, Visa, Vici, Home Depot, Broadcom, PepsiCo. There's many companies in here that are very defensive, and it protects me from situations like this. Sam Bankman-Fried's entire fortune has now been wiped out into pieces of his crypto empire shrivel to a value of $1. Furthermore, there's billions of dollars that have just essentially evaporated through what is known as a secret backdoor. But we're going to talk about all that in this video. We're not just going to talk about cryptocurrency, Sam Bankman-Fried, FTX, or basically the whole turmoil of bankruptcy that's going on right now, but just in general, we want to talk about investors chasing hype. And I'll give examples today of companies that I thought were very hype-filled, companies that had businesses that exploded in share price and have come crashing down since, and how you can avoid that as investors. Protecting yourself is key in this business. Doing these types of strategies that are very risky, very, very dangerous as investors, in my opinion, can be detrimental to not only your net worth, but your emotions with investing, and honestly, it can get you in a gambling mindset and a gambling mentality. So we're going to talk about in this video how to avoid these types of things, how to invest in companies that are profitable, actually produce real money, actually have floors of investing, return capital to shareholders, and provide opportunities to increase your net worth, not by luck, but by actually creating cash flow businesses that can provide wealth to shareholders like you and I. Thank you so much for tuning in. If you haven't seen me before, my name is Jordan, the Millennial Investor. My portfolio as of today is $43,349. Here's my performance since joining this brokerage, which, speaking of brokerages, we're going to talk today about M1 Finance. That's where we're going to show many of the charts here. That's where we're going to look at prices like Nikola stock. We're going to show Bitcoin price and many other stocks that have been crushed this year as of chasing the hype, and why I think you could avoid this as investors. So stay tuned. It's going to be a fun one. If you want to see this is my holdings as of the time of me filming, my performance tab versus the major indexes, my monthly and lifetime YouTube income shown right here. So you can pause the video if you want to see any of those right here. But overall, guys, I think it's going to be a fun one. It's going to be great. And without further ado, let's go ahead and start with the story of Sam Bankman-Fried. Now, if you don't know who this gentleman is, if you're not familiar with him, he is the creator, founder, CEO of FTX. He's grown FTX to a massive size in just a couple of years, really. And just, I believe 2020 was really the time it started ramping up. In 2020 to 2022, this company came from pretty much nothing to a multi-billion-dollar valuation. It says that his net worth as of the peak was $26 billion. And as of Monday, his net worth from owning a huge stake in this company was $16 billion, which means FTX in general must have been much larger than this. Now, something I want to mention is that we go on and read the story here, and we talk about how his value of his company went from about $8 billion from its most recent funding round to today's value of a dollar bill. Now, that's detrimental. Now, I don't know if this is accurate or not. I've seen estimates, but we talked about his net worth up here being about $16 billion. I've seen that the estimates today, now that the companies went bankrupt, he still has outstanding loans. I've seen estimates that his net worth are now in the negative 200 million range. So that's just crazy to say. That's crazy to see. And seeing a company that invested so heavily and grew so fast basically go bankrupt overnight is just pretty shocking to see. Now, the sad part about this, and this leads us to the topic of today's video, it's not about Sam Bankman-Fried. We're going to talk about why investors chase hype. One of the major issues that I see oftentimes, especially with newer retail investors, is that they lose money by chasing things that are not actually going to happen in most scenarios. $1 to $2 billion have just essentially evaporated. You have funds on a platform that you trust, like an FTX, and then just poof, the money goes away. And I'm looking here at Fidelity and my account and M1 Finance, and I'm looking at these returns and these balances, and you see that there's $43,000 here in my current portfolio as the time of me filming. And imagine if I just woke up one day and Fidelity just said, nope, this money isn't for you. You're not doing this. Yeah, this is our cash now. We're going bankrupt. Yeah, that's not a good idea at all. That's not something I think most investors would favor, and FTX is doing just that. And the reason this happens is because investors were chasing hype behind cryptocurrency, more specifically Bitcoin and Ethereum. And if you look at these prices, you can see how dramatically they've fallen. If we compare this to Ethereum, you can see how dramatically far down it's come in both of these. And I think Ethereum has had even a bigger downturn, in my opinion, peaking at around 4,600 today, trading at 1,200. It is down significantly. And these did have a big run over the last several years, don't get me wrong, but if you look over the last year or so, it's been detrimental. It's gone down and down and down, and now both of these are both down about 73, 74% just within the last 12 months. That's pretty detrimental to many investors' net worth. And they would often buy these cryptocurrencies on platforms like FTX, seeking opportunities to increase their net worth. Now, I see opportunities in the market all the time, and I find very profitable businesses. And I look for metrics of companies that can generate real cash flow. For example, my largest investment is CRM Salesforce, and their actual profits, the free cash flow they generate, is in the billions of dollars a year. 2017, 1.7, increased to 2.2, 2.8, 3.7, 4.1, 5.2. The profits over the years have increased dramatically and grew just 29% within the last year, and I think that they're going to expect to do that as the revenue has continued to gone up, and I do this across the board with most companies I invest in. I want to look for companies that can expand their moat, expand their business model, and return capital to shareholders through the form of buybacks or dividends, and I do this with pretty much every single company I invest in, and the bulk of my money goes to opportunities such as this, like Amazon, Google, whatever. There's many companies. But you see this apparent with many big, profitable investing stocks, but you don't see this with many hype plays. Let's look at a company, in my opinion, one that was a hype play, and what I essentially see is the closest thing to like a legal, legitimate scam. If you look over the last 5 years, you can see the chart. This company went public via SPAC. I've made many videos about Nikola before, including one just a month or two ago, and I talked about why I think this company is going to go bankrupt. This is a stock that originally peaked at almost $100. Today, trades at $2.97. And if you look just in the last 2 years, it's down 83%. In the last 1 year, it's down 78%, and it has evaporated shareholder wealth. This is one that if you go back during the time that it went public, at the very beginning, or the middle of 2020, I should say, in the middle of 2020 when this company went public, if you look at quarter over quarter, you see how this revenue just starts to populate in 2022? Yeah, all these numbers right here, this company didn't even have revenue yet. This was a pre-revenue company, and it was worth more than Ford. To me, that should be, it's so hard to even imagine how crazy that is. If you look at its profitability, or lack thereof, I should say, you see how the losses not only have not gotten better, they've gotten significantly worse. They're losing $50 million a quarter, 70, 80, 100, 150, 200. In the most recent quarter, they lost $370 million. And they're now getting to the point where their balance sheet, that cash pile that they had that was getting their company ramped up, is now evaporating. From a previous $900 million from the IPO, in the most recent quarter, that $900 million is now down to $300. Furthermore, not only has this company eliminated its cash pile, but its debt has starting to skyrocket as well. What was previously a no debt-ridden company, they're finally starting to get loans and now have $283 million. And if you look at these side by side, the cash and the debt pile, it starts to become apparent how bad this company burns cash. The $900 million that they had with no debt has now decreased to $315, and they now have about $300 million in debt on the balance sheet. See the red versus green here? The red was non-existent. The green was all the balance sheet was made up of, and now you have the green getting smaller and smaller by the quarter and the red getting higher and higher. But it's not just Nikola. There's many other companies. I'll give you an example of one that I thought was essentially a legal scam to investors as well. It was a company like ticker symbol SPCE. Let's pull this up on M1 Finance. Space stock, which is Virgin Galactic, is one that I see that is the closest thing to a scam, essentially just investing on hope and dreams and opportunities that will never come to fruition, and you see the share price hitting an all-time high at around $60. Now you see this all-time high of $60 and you think, wow, they must be innovating, they must be growing, they have lots of opportunities. And now you see today's share price of $5, a $5 bill, and you see the revenue, once again, going back to this time. The time when this peaked was around February of 2021, so about a year and a half ago. Let's go to February of 2021, which would have been the first quarter, right here. The revenue is $0. The revenue shortly after was $500,000. And $500,000 may sound a lot until you realize that this is a multi-billion-dollar company. And back then, when the price was $60 plus, this was around a $15-16 billion business. This was one of the largest companies on the planet, and they didn't have a dollar of revenue. And you see where this is going. What about the losses? Same thing with Nikola. This company burned cash as they paid employees. They paid major stock-based compensation for big CEOs and hotshots. And obviously, this company destroyed shareholder value, and this is not one that I would honestly be worth investing in because this company dilutes you in a big way and doesn't really generate any real free cash flow. Now, it's not just companies that are scams that are pre-revenue businesses, but oftentimes as investors, if you're chasing hype, you can have very dangerous setups like a Shopify. Now, I want to preface this by saying Shopify is a wonderful business. I think someone that wants to invest in Shopify for its actual qualitative aspects are a very good thing. You see that this business overall has been growing. Let's look at the annual charts for Shopify. You can see that this business has been growing in a big way. Its revenue has exploded. But not only that, its free cash flow has turned positive and is now a profitable business. They were losing some money, and then in 2020 and 2021, they now make hundreds of millions of dollars to shareholders. You can see this. Same thing, we were talking about balance sheets earlier. You can see how the balance sheet has been effective. The cash pile has exploded and provided a big safety net to investors. And then, of course, while they have diluted shareholders in the past, the shares outstanding is still going up, but it's not going up at a rapid clip like it once was. And I think this company will start doing share buybacks very soon. Furthermore, I think that this company does have lots of opportunities. And even if you look in 2022, despite the recession, they're still growing 21.5%. This company is what I consider to be a good business. Now, whether you like the stock, whether you think it's overpriced, underpriced, whatever, the actual business, the actual company itself, in my opinion, is going in the right direction. And even despite the horrible downturn it's seen in the last 5 years, it's provided 300% returns to shareholders because it is a good business. Now, the problem is that if you're chasing hype, if you're chasing opportunities that are honestly unrealistic, this is where you can get hurt. Look at the all-time high here. Those 300% returns we were talking about just a year or so ago were actually 1,600% returns. You can see that the stock was trading at a high at around $170 a share. And this seems like a company that deserves to go up. And in my opinion, it does. A business that deserves to increase its revenue, increase its profitability, deserves to have a share price that generally trends up over time. However, its valuation was at a level that was just frankly ridiculous. If you look at the market cap today, it trades at $50 billion, and it was 5 times higher in share price just a while back. So this was a $250 billion business, and it's a fraction of most businesses that are $250 billion. That's insanely high. And you see, if you look over the 2-year chart, let's zoom in here. When it hit that all-time high at around $160, $170 a share, it just went down and down and down and down, and now you see a share price of around $40. Now, I think it's now getting closer to what I consider to be its true value. I think that long term, over the next 5 years, I think that there's probably going to be a lot of upside from here. If I were to guess, I'm not a shareholder, I don't own the stock, but if I were to guess, the next 5 years, we're probably going to be pretty solid for Shopify. However, in that belief, I still recognize the danger that investors had. And it's not just Shopify. There's many stocks that have come down dramatically over the last several years. And I think that it's opportunities like this that get you hurt as a shareholder. Another one, and then I'll close out with this, is one like Palantir, one that traded off a lot of hope, a lot of excitement. This stock went IPO and basically just went vertical. It hit an all-time high at right around $40. Today it trades at $8. This is a company that once again has grown. I think that in general, the business is a good business, but you're not valuing the company properly. You see the growing revenue, you see the opportunity for this company to maybe start to generate some profits, and it overall is going in the right direction. However, being valued at a ridiculously high valuation is unrealistic. You see that today's $8 a share price, you see that the valuation today was around $17 billion. This was almost a $100 billion company for a company that still has minimal revenue, just a few $100 million a quarter. So that is just insane to think about. Just to give you an example, if this company was back at its all-time high, it was around $150 billion. If you compare this to my largest investment, Salesforce, it's right at $150 billion. And if you look at Palantir's quarterly revenue, its quarterly revenue is a couple $100 million a quarter, right around $400 or $500 million a quarter. And if you compare that to Salesforce, a great company that's growing fantastic and producing profits, it's not doing $400 or $500 million a quarter. It's doing 7 to 8 billion a quarter with a B. What is that? 15, 17 times the amount that Palantir does in revenue. And obviously this company generates real profits, unlike Palantir that has very, very, very minimal free cash flow. So it's these reasons why I think investors get hurt, why following investors like Sam Bankman-Fried is a mistake. Getting a company valuation to tens of billions of dollars down to virtually zero overnight and a net worth of 16 billion down to negative 200 million is not a mistake by investors. It's a mistake by everyone included. It's a mistake by FTX. It's a mistake by Sam, a mistake by the retail investors who believed in it. And it is from investors that are chasing these opportunities that are dangerous. Don't do this. Don't be a part of the statistics that lose money, that have awful retail investor returns, and instead invest in companies that produce real free cash flows. And if you want to see how to do that, that's what we do on this channel. Thank you guys so much for watching. Check out all the stuff down below in the description if you haven't already. My name is Jordan. I'm a Millennial Investor, and I'll catch you guys next time.